Bubna joins us, managing director with Sharda CropChem Limited. Let's understand from him that how agribusiness has got impacted because what is happening to the currency market and what is happening to the European market. Mr. Bubna, good morning. Thank you for joining us. There are two factors at play here. One, Europe is slowing down, and B, rupee has depreciated. They both are large macro moving parts for the business you are in. Could you combine them for us and tell us the picture, the impact of it?
See, the Ukraine-Russia war, as the macro situation remains challenging globally, particularly in Europe, the industry continues to face headwinds. As far as Sharda CropChem is concerned, we are on the same boat. However, we are witnessing some positive indicators in Q3 FY23 and H2 FY23 in comparison with H1 FY23. The recovery of various currencies against US dollar, particularly euro, some softening of RM currencies, RM prices, and better demands. So I think as far as the industry is concerned, they are facing a very strong challenge because of the Ukraine-Russia war and various raw material prices going up, energy prices going up in Europe. But luckily, India is not so much impacted, and so is the case with Sharda CropChem. We are doing fairly well.
It does come from China. China is going through a lockdown. So one side there is Europe, other side there is currency, and on the third side there is raw material. So it's like a perfect storm.
See, China, we are hearing in the media that there is some COVID and corona, but on the ground level, the situation is not so much affected, and our supplies continue to be very normal. So far, there is no adverse impact on our raw material supplies at all. On the contrary, there is some softening of the raw material prices, which goes in our favor.
Right. That's quite heartening to hear that your supply hasn't gotten disrupted from the China region. But I bet, Mr. Bubna, that pricing surely must have, right? You must be paying a lot higher for your raw materials, considering they are still uninterrupted.
Madam, then you didn't hear my last sentence properly.
No, I didn't. Please repeat. I
have said that raw material prices are softening. That means they are on the downward trend. It depends from molecule to molecule, but in general, the raw material prices are going down.
Right. Given that, that's the stance that you're taking, that the raw material prices are softening, are you then looking to lower product prices?
Yes. Lower raw material prices. Our product prices, we are getting, as I have explained you earlier, we are going by what the multinationals are pricing their products, and we sell at a small discount to those multinational companies, and multinationals have not reduced the prices at all.
What kind of volume growth is it that you're expecting for FY23 and 24?
Yeah, we are expecting a slight volume growth.
Can you just quantify that in terms of what that could be for FY23 and then for 24?
I think it will be better for me to give you the idea of the revenue growth. And on the revenue front, we should be able to grow about 15 to 20%.
EBITDA margins.
Compared to last year.
Mr. Bubna, I look at your EBITDA margins. September 2021, 14%. For the quarter gone by, then they went to 20% in March 2022. They've come down to 6 and they've come down to 9. Where will they settle?
Sir, I think it should settle around 15 to 18%.
And do you see that happening in this quarter, next quarter, or that could be 6 to 8 quarters away?
Yes, sir, I see that.
Okay. What gives you the confidence that they will come back to your original mean line of double digit?
See, mainly the currencies are recovering, as I have explained. Our EBITDA and everything went down, mainly because of the softening of the world currencies, particularly euro against US dollars, because all our sourcings are in US dollars. So prices in terms of the currencies have not gone down. In fact, they've been slightly improving. But the exchange rate was impacting our EBITDA, which is showing a very good improvement now.
Revisit your last quarter guidance. This was given when the conditions in the world were very different, currency was very different. revenue growth of 15 to 18%, gross margin of 26 to 30%, and EBITDA growth of 15 to 18%. You're sounding
Yes.
confident to me, sir. Would you like to change any of your guidance numbers?
No, sir. In fact, we are on the improvement and we are in a very good situation at this moment.
No, I'm saying how about revising them on the upside? Because there's no harm in changing the guidance up also.
Sir, we have the history of poor performances in Q1 and Q2. We have to also take that up, and most of the losses or beating of the performance was mainly because of the exchange rates or cross-currency exchange rates, and a lot of them were notional because at the end of the quarter we have to value all our receivables and payables on the rate which is existing on the last day of the quarter. So they were not actual losses, but a lot of them was notional losses, which we are recovering now.
Mr. Bubna, great to have you on the show. Thank you so much for taking the time out.